Welcome to the deep dive. We're here to cut through the noise, really distill what matters from our sources. Today, we're jumping into best investments in the USA for 2025. Our goal, it's pretty simple. Arm you with the forward-looking insights you need to, well, grow your wealth. We're skipping the basic stuff you already know.
Exactly. If you're really looking to make your money work for you, not just sit there, then this is definitely for you. I mean, the core reasons to invest, they don't really change much, do they? Empowering yourself financially, beating inflation, hitting those big long-term goals. But what's interesting is our sources point to some specific things for 2025 that kind of fine-tune those principles.
Okay, great. So let's unpack that journey. From keeping capital safe all the way to growth. We should probably start with the foundation, right? Not exactly market investments like stocks, but really crucial stuff. High yield savings accounts, HYSAs, and certificates of deposit, CD.
Right. And a key insight here, maybe for 2025, is with interest rates maybe stabilizing, HYSAs could actually outperform short-term bond yields for your emergency cash. That gives you surprising flexibility and safety. And CDs, well, they lock up your money for a bit, but you get a guaranteed interest rate. Super safe too. They're FDIC insured.
Yeah.
So, your deposits are protected by the government up to that $250,000 limit.
Okay, so that stable base is secured. What's next? Our sources seem to guide us towards predictable income. That's where bonds come in, I suppose. What are we seeing there for 2025? Any shifts?
Yeah, it's a bit more nuanced than just loaning money. Our deep dive showed a potential opportunity in high-grade municipal bonds for 2025, especially considering specific state tax advantages mentioned in the sources. And while U.S. Treasuries, they're still the gold standard for safety, right? Their yields fluctuate. So depending on your risk tolerance, corporate bonds from companies with strong finances might look more appealing for that mix of stability and potentially higher income.
Interesting. So, okay, you've got the safety net, considered some income streams. Then comes the real engine, right? The thing that historically anyway drives long-term wealth. We're talking about equity markets, stocks.
Yeah, and this brings up a really important point. Beyond just like the stock price going up or getting dividends, our source material seems to really emphasize companies with strong free cash flow in 2025. It suggests maybe a strategic shift, moving away from just pure growth stories towards sustainable profitability. That's becoming a key driver. It's really about finding companies that can, actually fund their own expansion and return value to shareholders.
Right. But picking individual stocks, that can feel risky for a lot of people. And it takes a ton of time. So for diversified exposure, the source is stress funds again, like buying a pre-made basket of different stocks.
Exactly. And what people sometimes forget about these funds, whether it's mutual funds, index funds, or ETFs, isn't just the instant diversification. It's how they streamline things for you, especially looking ahead to 2025. Take an S&P 500 ETF. Simple. You get a piece of the 500 biggest U.S. companies. Our sources just reiterate its role. It's a famously low cost, kind of a foundational set it and forget it strategy, even when the market gets choppy.
Okay. Now, what about real estate? Some people are drawn to that, but, buying property directly is a big hurdle. Our sources specifically mentioned REITs, real estate investment trusts, as a potent option for 2025.
Yeah. REITs are basically companies owning properties that generate income. Think data centers, warehouses, that sort of thing. You buy shares just like stocks. For 2025, the insights seem to point towards specific types like industrial or specialized REITs. They might outperform the more traditional retail or office ones just because of how the economy is shifting. They often pay out decent dividends, offer market liquidity, which is good. But, their value can definitely be sensitive to interest rate moves.
Got it. So we've covered a lot of the what to invest in. Now let's talk how. The deep dive really hammered home two critical strategies. First one, diversification. Don't put all your eggs in one basket.
Exactly right. A mix, stocks, bonds, maybe some REITs is just crucial to lower your risk, especially with, all the different economic forecasts floating around for 2025. And the second rule, maybe even more important, embrace that long-term mindset. The market will go up and down, always has, always will, but time in the market that consistently beats trying to time the market. Patient investors nearly always get rewarded.
So true. Okay. And practically speaking, how do you actually start buying this stuff?
It's actually easier than ever these days. You just pick an online brokerage. The big names like Fidelity or Vanguard open an account. It could be a standard brokerage account or maybe a Roth IRA for retirement. Link your bank account and you're pretty much ready to go.
It sounds almost too simple sometimes.
Well, this is where it gets really powerful, I think. The most important step is just taking it. That first one, start small if you need to, stay consistent, and just let that amazing power of compounding do its thing for you over time. But that first step, however small it feels, that sets everything else in motion.
And that really brings us to the end of our deep dive for today. The core message we've pulled out is pretty clear. Building wealth in the USA, especially looking at 2025, it really starts and grows with consistency, thinking long term, and using a smart mix of these different tools we talked about, from secure savings right up to growth focused funds.
Yeah, absolutely. So this deep dive, it's outlined some really powerful tools for your financial future. Thinking about all these options and the specific sort of nuances for 2025 we've discussed. What specific financial goal are you ready to start building towards right now? If that just means taking that first step to learn a bit more.